Taiwan semiconductor manufacturing is our new market analysis. Decades ago, chip manufacturers produced their own products, but that vertically integrated model is incredibly capital intensive, and the industry soon realized that it was more efficient to outsource chip making. That epiphany gave rise to the fabless model in which semiconductor companies design chips manufactured by a third-party chip foundry. Founded in 1987 by Morris Chang, Taiwan Semiconductor Manufacturing Co., TSMC, is the world's largest independent chip manufacturer, dominating the industry with a market share of about 56%. The stock has been paying annual dividends since 2003, and after significant coupon adjustments over the past 3 years, it has offered a dividend yield of 3.32% at current prices. A perfectly sustainable value return policy, Taiwan Semiconductor currently uses about 45% of its profits for distributions. Processing processors can now be found everywhere, in smartphones, cars, data centers, network equipment, and more. Workloads are also becoming more sophisticated, requiring specialized chips that can efficiently handle everything from video compression to machine learning to image signal processing. These tasks are increasingly being performed on small, low-power devices. Meanwhile, cloud computing giants are using powerful chips in data centers that can focus on narrow high-performance computing, HPC applications. Taiwan Semiconductor serves all of these markets. Its technology portfolio is remarkably broad, using nearly 300 distinct process technologies to produce more than 10,000 products for approximately 500 customers, including prominent companies such as Apple, Advanced Micro Devices, and Qualcomm. Smartphones account for nearly half of the business, with HPC applications accounting for a third of sales. The rest of the revenue comes from emerging areas such as the Internet of Things, IoT, automotive, and data communication equipment, DCE. Taiwan Semi's management team also has decades of combined experience. CEO CCY has been with TSMC since the late 90s, climbing the ranks and having served as co-CUO and co-CEO alongside Mark Liu, who joined the early 90s and is currently chairman of the board. Chang, known as the godfather of Taiwan's chip industry, retired in 2018 but left the company in very capable hands. Why buy Taiwan Semiconductor manufacturing shares? Although the global smartphone market has matured, there are still potential growth opportunities such as the one in India, which has become the second largest smartphone market in the world after China. In addition, newer phones offer improved experiences and performance that require increasingly sophisticated chips, and 5G will be a multi-year megatrend. In the world of chip manufacturing, smaller transistors result in higher yields and greater processing efficiency. That is why the technological arms race among chip manufacturers is heavily based on ever smaller production processes. The good news is that TSMC is the clear technology leader, even ahead of chip giant Intel. TSMC production is at 7 nanometers, but the company is preparing to increase the series production of its 5 nanometer process by the end of the year. In contrast, Intel is still stuck with the 10 nanometer process and has just announced that it is delaying its 7 nanometer chips until at least 2022. In fact, Intel is now ordering chips from TSMC in an unprecedented move. Underscoring this leadership, Apple announced its plans to stop using Intel processors in Macs in the next 2 years. Relying on Intel's timelines has become a responsibility for Apple's product roadmaps. Although Mac drive volumes are relatively modest in the broader PC market, the move validates TSMC's advantage. With more than $20.5 billion in cash, TSMC's balance sheet is solid, and its large cash flow has no problem covering the massive capital expenditures needed to stay ahead of the competition. The company maintains a positive free cash flow after investing in production infrastructure, which in turn finances its dividends. Financial data. The revenues of Taiwan Semiconductor Manufacturing Co., Limited grew by 25.17% in the year 2020 compared to the year 2019 to 1.34. Net profit grew by 50% to 517.89 billion. This is definitely one of the most solid and promising titles between now and the next 5 to 10 years. The company has a net profit margin of 38.67% and a very good PE of 28.78. Stocks have jumped a lot in recent months following a strong quarterly earnings release, but we believe there is even more upside in store for this stock as chip demand right now also outstrips supply, and the dominant chip foundry, TSMC, is at the forefront of grabbing more revenue and new customers thanks to its advanced technology and global dominance. I hope you liked the video. In that case, I invite you to subscribe and put a like to support the channel. Thanks.